Guys, hope all is well. My name is Christian. I'm a CPA that helps government contractors with accounting. In this video, we're going over the chart of account structure for government accounting. Give your guys a chart of accounts template. Therefore, you can plug this template into your QuickBooks software and Suite software, whatever accounting software you're using. This is going to be the heart of your accounting. We call it these general ledger accounts that make up a chart of accounts. It's a list of accounts that basically make up your financial statements, right? So that's what we're going to go over. First, I want to show you the structure. So the first three are going to be on your balance sheet. That shows that net worth of the business. How much do I owe? How much am I worth? How much do I have, right? These are the questions that balance sheet asks. So assets, usually that first one that you see on the balance sheet. Following the liabilities, which are the loans or the liabilities under your business, what you owe. Equity capital, those are basically the partnerships, contributions and distributions, just the contributions and distributions if you're solo. And then also the retained earnings. Your business ends, that profit sits in that retained earnings. It either goes down or up depending on if you made a profit or a loss. Now, these next four and down, those are going to be on your income statement. This is usually what those business owners see when you're looking at your business financials because you want to know how much money you're making, right? So the income and revenue is what you see first. That's just how much you're winning off these contracts and awards, how much hits your bank account and deposits for services or products you delivered. Direct cost of goods. It's the expenses associated with you performing your service or product. The expenses associated with directly serving your services or products. That's going to be tied up direct cost of goods. So if you're in janitorial construction, it's going to be your labor hours, right? It's going to be your material purchases to get that job done. Fringe is basically the cost to support your W-2. That can be dental, insurance, medical, vision, other fringe benefits such as gym memberships. That can be under fringe. That's going to be extremely important that you calculate that and also separate that out. We want to separate that out. In government contract, this needs to be separated, right? This needs to be under its own cost pool. The next one is overhead. Basically shows the support of your facility, like the rent and fixed overhead associated with your business. General administrative is those indirect expenses associated with running your business. You want to calculate that. Your W-2 admin salaries will fall under here, right? They're not going to fall under that direct because they're not out there in the field basically working to get that job done. They're supporting it, right? They're a supporting cast. It's going to fall under that general or administrative. And then most importantly, this unallowable expense is extremely important when it comes to government contractors. Most commercial businesses or other businesses, they don't have this unallowable expense because they don't have to adhere to any reporting agencies, really. These unallowable expenses are exactly what it's said it is. It's basically, hey, we're not reimbursing that money back. You need to exclude that from your financials in a way by putting it in this cost pool called unallowable expense. And we're actually going to switch over. I'm going to actually show you that free chart of accounts I'm going to give you. I want to talk about the unallowable expenses, just talk about it a little bit. We're not going to go line for line. Y'all guys can read this on your own. But things like advertising and promotion, government's not going to reimburse you for that. That's just like cost just to run your business outside of like government contracting. Charitable contributions. Government wants nothing to do with your charitable contributions. They're not going to reimburse you for that. Fines and penalties, you shouldn't have them anyway. The IRS isn't going to promote bad behavior and say, hey, yeah, we're going to reimburse your fines and penalties. Things like alcohol and entertainment. The government will not basically be reimbursing that. Your flights to like first class business, if that gets audited by DCAA, they're pulling and say, no, that's not it. We're not doing that. So that's just a little bit of it. But I want to just show you the structure of what we really went over in a list of assets, right? So this first part on the balance sheets is just your assets. Your bank accounts will be connected here, and you'll swap these out, right? You put the name of your bank accounts. Your AR, billed and unbilled, is extremely important. So in the world of government accounting, y'all guys use accrual method. Accrual method is what y'all guys use. We'll go over the difference of cash and accrual later on, but accounts receivable, y'all guys need to have that account, and it needs to be something that you're using. I'm going to scroll down to the fixed assets. These are just maybe the furniture, computer equipment, machinery that you use, that you have underneath your business. You want to capture that to beef up your balance sheet. Next, I'm moving over to that accounts payable. These are the liabilities. Could be payroll liability, could be long-term liability for you borrowing money, right? This is going to be hosted under your liabilities account. Then you're seeing this equity, right? This equity. This is basically the equity of your business. Want to capture that. It's going to capture that in the retained earnings as your business goes from basically making profits to taking loss. It gets stored in this retained earning. That just shows basically the earnings of your business. Same with your partnerships, contributions, and distributions. That will be held under that equity section too as well. Right, so when the owner gives money to the business or when it takes out, that's not W-2 salary. It's going to be under that equity section. Now, when you come here, you get moved to basically that income. Billed revenue and unbilled needs to be calculated differently. That's your income. See all these direct costs? This is the cost associated with directly performing your job. Right? I use janitor because that's the most simplest and easiest one to kind of like. If your workers are on the field delivering a contract or fulfilling the contract needs, that's direct labor, right? If you got plywood that you're using in order to complete a job that the government wants you to fulfill, that's going to be under direct material. The travel cost to get there, say if you're in Houston and you have work in Atlanta to go deliver something, that travel cost to get there, that's directly associated with fulfilling a job. So you want to capture that in different buckets. These will be in your general ledger. All these accounts make up your chart of accounts. So the next part is your fringe benefit expense. These are the costs associated with supporting your W-2. You want to record these in a separate pool, and you notice how each account, fringe benefit, has an account number. That's how we separate each general ledger. It just looks neater that way. You can tell that a professional accountant is dealing with these books. It's just easier to pull your accounts from that. Your facilities expense, that's that overhead that we were talking about. The utilities, office rent, to support your building, that's going to be there. Assets under 1,000 or 2,500, that's going to be there, right? And you see how this travel is broken up differently from direct cost travel? Because this is like travel that maybe you went to like a business seminar or something. Are you driving around your hometown to pick up some office supplies? That's going to be in this overhead expense travel, right? It's not going to be associated with directly delivering that contract. Therefore, it's not going to be a direct cost. Right? I'm just briefly showing you this just so you understand the theory and the concept. Same with G&A. I want to point to your G&A labor. Mind you, your administrative team won't be in direct labor unless you're performing some management consulting tasks where they're delivering that contract for you. But if you're in janitorial and you have like your admin under direct labor, that's a no-no. They're not directly performing that contract. They support the contract, right? So these are like the indirect costs essentially. Bid proposal costs, labor costs, things to get that bid going. We're not going to basically account that for direct costs either. That's going to be your G&A to help basically get that proposal out. That's administrative tasks really. So we're going to capture that in this expense. So basically all these general ledgers, all these accounts, if you have this set up, you should be able to capture almost every expense that you should account, right? I'm going to give you this in the link free. Reach out to us if you have any questions to get this started, get this set up. But this is the basics of accounting when it comes to government accounting. You want a good, healthy chart of accounts that's going to capture the right expense. So if you ever get audited or maybe you have an 8A contract and you need to get a review or audit, you're starting off on the right path with this, right? So I'm going to do more videos. This is like part 2. I'm going to do more videos for you. If you have any questions, put something in the comment below or reach out to us. Thank you.